Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Southwest Airlines, ticker symbol LUV, LUV. So Southwest Airlines is known as being one of the best in its class, with its returns over its history being head and shoulders above many of its airline peers. Southwest Airlines has a very interesting operational model compared to its peers and has a very storied history. A good initial glimpse of what sets Southwest Airlines apart can be found in Jim Collins' book, Great by Choice. Southwest co-founder and longtime CEO Herb Kelleher was quite the character. Really, any sort of research on Southwest Airlines is quite the treat. Airlines have historically been a very difficult business, and given the huge impact that the COVID-19 pandemic has had on the industry, we're going to be looking at how Southwest has fared by digging in deeper here and taking a look at the underlying business fundamentals that are undergirding their stock price. So currently, Southwest Airlines is trading for $30.84 per share. Over the past year, their stock price is down 41%. Over 3 years, that's about the same. They hit a low of about $24 per share in May of 2020. Then they rebounded to more than double that in early 2021. And since then, they have been cut in half again. Over the past 10 years, this has been a very different story. Southwest Airlines has compounded at a rate of about 15% annually, which is actually beating the market over this time, even given their recent drawdowns. Going back prior to the global financial crisis, however, Southwest Airlines has only returned about 5% compounded annually. From their lows in March of 2009, the company is up about 5 times. The other reason we're looking at Southwest today is because the business just recently hit their 52-week low, which is down nearly $26 from their 52-week high. We've seen a lot of other airlines with quite a bit of short interest around their business. Southwest only has 1.5% of their shares outstanding currently sold short, and they have an $18 billion market cap. For more background about the business, Southwest Airlines is the largest domestic carrier in the United States as measured by the number of originating passengers boarded. Southwest operates over 700 aircraft in an all Boeing 737 fleet. Despite expanding into longer routes and business travel, the airline still specializes in short-haul leisure flights using a point-to-point network. Southwest operates a low-cost carrier business model. Originally, the idea behind Southwest is that they wanted to make flying from point to point more economical than driving there, and basically they've been able to scale their model from there. Southwest Airlines was incorporated in 1967 and is headquartered in Dallas, Texas. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Southwest Airlines based off of their business fundamentals. So this analysis is still evolving, it's still a work in progress, and it's an opportunity to learn in public. So with that said, let's get right into our analysis. So starting off with metric number 1, here we want their average return on capital over the past 5 years to be above 14%. So there are a couple of reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. So by asking for 14%, we can potentially build in some margin of safety for ourselves based on the overall quality of the business. The second is that over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these business returns are captured here by return on capital. Prior to the lockdowns of the COVID-19 pandemic, Southwest Airlines was earning significantly above average returns on capital. In these preceding years, they were both above average and they were above that 14% mark we'd want. However, since then, in fiscal 2020 and 2021, they had negative returns on capital. Thankfully, we are seeing their business rebound, and over the last 12 months, Southwest Airlines has produced about 5% return on capital. Their returns on capital are back into the black here. They are now positive again. This makes Southwest only one of a handful of their peers in the airline industry that's earning positive returns on capital right now. Averaged out, however, even with these above average years before the pandemic and then these below average years since, Southwest Airlines is only producing about a 6.6% average return on capital. So unfortunately, that's just a little bit lower than average, but that's well below that 14% mark we were looking for. So this is going to be an X to start off here on metric number 1. Next up for metric number 2, here we're taking a high-level overview of the cash coming into the company. We want to see revenue, earnings, and free cash flow growth in the past 5 years. This metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So looking at their revenues first, so even though from fiscal 2017 to 2021, it looks like their revenues are down, over the last 12 months, their revenues are up just the tiniest smidge over where they were in 2017. Comparing their numbers year over year from 2019 to 2020, we really get to see the brunt and the full impact of the pandemic as their revenues were cut in half and both their earnings and free cash flows, which were formerly positive, swung into the negative. Their earnings are still down from where they were in 2017. So this means that this metric is going to be an X, and their free cash flows have rebounded from being negative in 2020 to now they are positive both in 2021 and over the last 12 months. This is really important because free cash flow is the lifeblood of a business, and it can be used to reinvest back into the company, make acquisitions, pay down debt, buy back shares, or pay out dividends. A business's abilities to produce free cash flows now and into the future, discounted back by some reasonable rate, is ultimately what that business is going to be worth. Even though we are seeing that their earnings are down over the last 5 years, and this means that this metric is going to be an X. So even though this is an X on metric number 2, things could be a lot worse here for Southwest. Metric number 3 is going to be building off of the previous metric. Here we're taking the perspective of an individual shareholder in the company by looking at their metrics on a per share basis. Specifically here, we're looking for earnings per share growth over the past 5 years. Unfortunately, their earnings are down over this time, and Southwest has diluted existing shareholders by a very tiny amount, with only 3% shareholder dilution in the past 5 years. Nevertheless, this is going to be an X here on metric number 3. We don't like to see shareholder dilution because when you purchase a share of stock, what you're really buying is that fractional ownership percentage in that underlying business. So when a business is issuing new shares and diluting existing shareholders, they're ultimately decreasing your ownership percentage in that business. So 3% shareholder dilution is not a lot to be worried about here. That's much better than where a lot of Southwest peers are at. And given the huge operational challenge the pandemic has thrown at the airlines industry, again, similar to the previous metric, things could be a lot worse off here as well. Even though we are 0 for 3 to start off here so far on Southwest, we're seeing signs of hope and signs of recovery in their business. Metric number 4 is very similar to the previous metric. Here we're looking for 5-year free cash flow per share growth. So their numbers from fiscal 2017 to fiscal 2021 would seem to indicate that they had a growth in their free cash flow per share metrics. However, over the last 12 months, these free cash flows per share are actually down. So this is going to be another X here on metric number 4. Over extended periods of time, we'd want to see a business's earnings and free cash flows being roughly equivalent. That's pretty much been the case here for Southwest. If you were looking at a business and saw huge discrepancies here, specifically with very low amounts of free cash flow to very high amounts of earnings, you'd want to dig in deeper and understand what's going on. There may be industry dynamics at play. However, it could also potentially be a sign of either aggressive accounting or, in even some extreme cases, fraud. So seeing a mismatch here was actually one of the ways that you could have spotted some frauds in the early 2000s, such as Enron or WorldCom ahead of time. So that's just something that's nice to keep an eye out for here. Nonetheless, so far through the first 4 metrics on Southwest, we are 0 for 4. Next up, for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that Southwest has produced over the past 5 years. So at the end of last year, Southwest had a cash cushion of $3.2 billion after paying off all of their debt. Currently, they've increased this cash cushion. Now they're sitting on $4.4 billion of cash after paying off all their debts. So this is going to be a check here on metric number 5. Over this time, they've generated about $8 billion of free cash flow as well. Outside of the shutdowns in 2020, their free cash flows relative to their debts are looking very healthy here, and for the most part, in much better shape than a lot of their peers. So this is an important metric to get a check on, and this is going to be our first check here on metric number 5. It's not often we would see a company go 0 for 4 to start off and then get their first check here. But given the whiplash of what happened in the airline industry, we're seeing that here with Southwest. This cash position that they're sitting on is also going to come into play in our next metric. Finally, the big metric of them all, metric number 6, we want their average 5-year free cash flow yield to their total enterprise value to be above 5%. So if this is the case, this will give us a slight risk premium to the risk-free rate of the 10-year treasury. We're using total enterprise value here rather than the company's market cap because total enterprise value is going to give us a more realistic economic picture of the business, as if Southwest were a private company by taking into account both its market cap and its net debt position. Southwest stands out amongst its peers because they have a negative net debt position, meaning that they are sitting on a pile of about $4.4 billion in cash right now. Because this is the case, this means that their total enterprise value is actually lower than what their market cap is. And currently Southwest just hit its 52-week low for their total enterprise value by quite a bit. Right now, Southwest enterprise value is about $13.9 billion. And we learned that over the past 5 years, they produced a little under $8 billion in free cash flows, which means that in an average year, Southwest is producing about $1,560 million of free cash flow. So when we divide their average free cash flows by their total enterprise value, we get an average free cash flow to total enterprise value yield of about 11.2%. So that is more than double the metric we were looking for, and this is going to be another check here on metric number 6. It's also worth noting that over the last 12 months, Southwest Airlines has produced $825 million in free cash flow, so their free cash flow numbers are down from where they were historically over the past 5 years. But even when we take their current last 12 months of free cash flows and divide that by their total enterprise value, that still gives us a current free cash flow to enterprise value yield of a little under 6%. So either way, based off of their average 5-year free cash flows or based off of their last 12 months of free cash flows, Southwest is currently trading above that yield that we're looking for. So given their cash cushion and the fact that the business is generating a lot of free cash flows relative to their total enterprise value, the business is actually looking to be in pretty healthy and pretty solid financial shape, even though they've only gotten checks on our 2 most recent metrics. Finally, here we're taking a look at Southwest Airlines' dividend profile. So Southwest Airlines was paying out a steady increasing dividend all the way up until 2020. They rapidly cut their dividend altogether after they recognized what their industry was really in for. In the years that they were paying out these dividends in 2017, 2018, and 2019, their dividend payments were well supported by the company's abilities to produce free cash flows. And now that they're back to producing positive free cash flows, as long as the business is able to keep up with solid competitive footing, you could reasonably expect that they would begin paying out dividends again sometime in the near to medium future. Their fundamentals look like they are recovering much better than some of their peers. If their abilities to return capital to shareholders through the form of dividends are something that potentially interests you about the business, then look for their fundamentals to continue to improve. You may very well see that the company announces that they'll be paying out dividends again. So in summary, Southwest Airlines had us a little bit worried. We were 0 for 4 on our first 4 metrics. However, in total, Southwest checks the box on 2 out of 6 metrics. They're sitting on $4.4 billion of cash right now, and they're producing a lot of free cash flow both on a current and 5-year historical basis relative to what their company is currently valued at. We did see, however, that given the impacts of the pandemic, over the last 5 years, they're producing only about average returns on capital. Their revenues are up just the slightest amount over that time frame. However, their earnings and free cash flows are down. In both cases, their earnings and free cash flows are still positive, which means that they've rebounded nicely from 2020 until now. They've also diluted shareholders by just a small amount. Again, much better than a lot of where their peers were at. And we learned that the company cut their dividend pretty much right away in 2020 after realizing the nature of the pandemic and its associated lockdowns and what implications that would have for the airline and travel industry. However, if we were to continue to see that their fundamentals keep improving and that their business remains steady going forward, then we could reasonably expect them to restart returning capital to shareholders through the form of dividend payments. Southwest has a reputation based off its historical track records that it's been able to outperform and outclass many of its peers. Given how the business has recovered from the pandemic relative to its peers, even though they operate in a very difficult industry, with commercial air flights being a commodity business, Southwest Airlines still is an excellent operator, and they've put in place a lot of efficiencies in their business to get some of these low-cost operator advantages. So keep in mind that this type of analysis serves as a beginning holistic starting point to help you determine whether it's worth your time to dig in and learn more about Southwest Airlines. If you're interested in learning more about the company, I would highly recommend reading through the company's historical 10Ks to get a deeper history of the business. Those will also outline the risks associated with the business and help you get a better sense of both the challenges and opportunities of the airline business and the environment that Southwest operates in. You'll also understand how management is approaching capital allocation and strategic decision making going forward. In addition to that, I mentioned Jim Collins' book, Great by Choice, earlier. It's a great book that looks at a variety of companies, and one of those companies is Southwest Airlines. While it does just give a brief description of how Southwest operates, that, at least for me, was a good starting point. And then if you're serious about the business, I'd also recommend reading pretty much anything you can get your hands on from Southwest co-founder Herb Kelleher. When you're done with that, if you still want to go deeper, you can read through some of the company's recent earnings call transcripts. Those will be especially helpful here, given the tumultuous times that the airline industry has been under over the past 2.5 years. So that'll help you understand how Southwest Airlines business continues to or does not improve their operating results as the airline industry keeps normalizing after COVID. Then keep in mind that this type of analysis is not financial advice. It is not a buy or sell recommendation of any security. And before considering any investment decision, please consult with the properly licensed and registered financial and legal professionals. As a value investor, you ultimately want to learn about a business as if you owned 100% of it, and you can understand all of the ins and outs of the business and truly understand what matters and what's not important for the company as you tease out the essence of the business. So with that said, that's it for today's fundamental stock analysis of Southwest Airlines Co., ticker symbol LUV, LUV. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and show some love in the comments down below. Thanks for learning about Southwest Airlines with me. Have a great day.